Monday morning, October 1st for the market levels report, starting off with the S&P 500 Emini, traded lower down into this 1427s area through the Sunday Globex session reopen into Monday morning. As you can see, the market did trade lower in the evening last night. We did have a little bleed off, was getting some selling and traded down as low as about the 1427s and change. Euro was down last night. Since then, Euro has gone into rally mode, and the EU markets had a pretty decent market last night. And you can see the ES here was able to trade back up as high as the 1442s. Now we do have multiple levels of short inventory that have been accumulating in the end of Friday's action and then coming into this action Sunday night Globex into Monday morning. So I now have two levels of held short inventory that are now tied to the highest price achieved since that inventory came in. So that inventory is now tied to the 1442s and change area. So 1442s, in each push or challenge of that area, we have 2 levels of held inventory tied to that. Next level of held inventory is above that, slightly higher up here at the 1444s from prior week's action. I am tracking a little bit of long inventory that's come in here in the evening, right here off the 1427s and change area. That is our current low of the session anyhow. If we go to the lowest held level of long inventory, we do have inventory that's actually been continuing to hold since this point in time where these buyers came in. So this inventory that came in here on a prior day, this is now tied to the lowest pricing level that has been achieved since the buyers stepped into the market and started buying this pricing level. So now we have this pullback was into a delta divergence, and we did get a bounce out of that delta divergence. There was a lot of long inventory that was holding, and the market is lifted out of that area. So we now have 2 levels tied to trade, any trade down to the 1427s. We'll see if that inventory is still holding or not. If it is, that would be potential inventory support. So far for overhead inventory resistance, we do have sellers holding that inventory 2 levels now tied to this 1442s. Above that, if the market was to trade higher, we do have inventory still holding up here off the 1457s area, 1458s and change. We do have inventory up here at the 1462s and change, and the highest held level of inventory still tied up here to the 1468s. So now the market has had some long inventory support hold into a pullback, and we've lifted out of that area, but we've now traded up to overhead resistance. So any push through 1442s today could trigger short covering. Any push down here to about the 1427s area could cause long liquidation acceleration. So those are our 2 key areas, and so far the market's trading between those levels. Now taking a look at Euro this morning, we did have a major pullback. We've traded to new lower pricing levels. Right in that 2810s area, just above that area. And you can see into this pullback, we did retain long inventory. So buyers that have been buying the euro from this point in time going forward have elected to retain portions of this held long inventory. We had an initial pullback, we bounced. Market was a little bit higher than this previous pivot level. We did bounce. Market since then has traded lower. And the pullback here, we have a delta divergence. So anytime we get a pullback lower than previous pricing levels where buyers came in and those buyers hold that previous inventory and they keep buying more, that's a divergence. It's a sign that we have larger liquidity participants accumulating and are willing to buy price trading equal or lower. So instead of getting long liquidation, we're actually getting active buying. Now on the bounce though, we get a bunch of covering. So it looks like some of these buyers have pulled liquidity out of this move. So you get a beautiful bounce move. What's that? Over 100 pips of a move, and you get big cashing out. The entities that were buying these pullbacks, I do have some evidence here, have liquidated some of that. And it makes sense. The market here is higher than any of the previous lower buying price levels. Once the market lifts higher than the price levels they were buying, at any point that the move starts to look like it's dissipating momentum, they start cashing into it and taking profits. That way they can adjust the cost basis of their held long positions. You can get rid of any long positions from pricing levels that are higher while retaining long position inventory from pricing level where they were a buyer at lower pricing levels. The market bounces, has a big bounce on that continued active buying, and then they cash into the move. So that's where the euro sits here, just below the 2900s level. We do have some overhead held resistance. We did tag out one level that neutralizes the inventory that was holding here near the 2970s. Main key area though remains is that 2980s. Still have lots of inventory tied to these two pricing levels from prior day's action. We now have a little bit of overhead resistance right here up around the 2920s from new sell response that's come in. And our lowest level and our only level of held long inventory now is all the long inventory that's tied to and holding from this 28, we'll call it the 2018s area, just above the 2800 level. So that is our key long inventory held area, our first level of overhead held inventory resistance, and the next critical area. Any trade up through these areas of 2920 could unwind some of these directional sellers in here, might help us lift a little bit, but we're going to need some newly initiated buying, some catalysts to drive us up to these pricing levels, about 100 or about 90 pips higher from our current price, before we get to a price level that's really holding a lot of short inventory and could be very reactionary. So that is the euro for today. And in oil, not much going on, sideways trade. This market has no significant held short inventory at all. That's why it's stalling. It needs a catalyst to get newly initiated buyers to drive this higher. It's just not happening. Oil settling back into its range as it runs out of held short inventory. So oil sitting here right around the 9190s, but there's nobody that can be forced into short covering at this time. There's just no significant held short inventory in this contract. Key levels where we're holding long inventory, I guess I'll index one more level. We do have some buyers that stepped in here pretty good, just below the 91 pricing level. So let's take a look at that. Looks like it's right around the 9180s or the 9080s pricing level. So we do have buyers, looks like at 9082's pricing level. So we have a little bit of buyers that are still holding inventory off that level. And then our last two levels of held long inventory are tied to our lowest pricing level, which I talked about last week, just right here down near the 89s. So these are all the reactive pricing levels. If we trade down to this area, we might start getting some long liquidation. Might trigger it if we trade to that 9080s pricing level. For oil to break up and trade higher, we're going to need a catalyst. We're going to need something to drive it, something to draw in newly initiated buyers that are willing to buy this range area highs, and we're going to need a catalyst. So we'll be watching oil today, see if we can trade higher. The only way we're going higher though is we're going to need newly initiated buying. We don't have any short holders that can be driven into short covering. We really don't have fuel for upside price movement built on short covering alone. And that is the story for oil on Monday. And just a real quick look at gold. Gold not able yet to pierce through the 1790s. We do have some overhead resistance. You can see here that those that sold this area prior in the 1770s area, some of that short inventory has held through trade up to the 1785s, 86s area. So I'm still looking for any upside push to start triggering some short covering, and gold could easily then break out and at least make a run up here to the 1800s, maybe slightly higher, just on short covering alone. If the order book gets real thin, there's not a lot of limit orders when the short covering, or not a lot of limit order activity resting in the order book when the short covering is triggered, we could even go higher. So if it's like a news type item and shorts start just totally buying to cover and unwinding, and the order book gets real thin where the limit order activity on the offer side starts to disappear, gold could make a big move. If we just get kind of typical where we're grinding up, newly initiated buyers, triggering short covering, price drives up into overhead inventory resistance and starts breaking out, then looking at a run to the 1800s is very doable just on short covering getting triggered kind of in a typical way without any problem. To the downside, gold, as you can see here, is holding some long inventory now tied down here to the 1730s area, right around 1738s, 39s, and our lowest held level still remains down here. And let's just take a look at this so we specifically know the pricing level right here down around the 1647s pricing level. That is our lowest held level of long inventory in gold. So that's the story for gold. I'm still expecting gold to make a few more runs at the 1790s area, and I wouldn't be surprised to see a breakout above this pricing level at some point this week. And that is Market Levels Report for Monday, October 1st. One announcement I was going to make for Market Levels Report. Tomorrow I will be including the website, give you information on what Market Levels Report is all about in detail. I will be activating the website throughout the day today, and you'll be able to see the website tomorrow. If you have any questions at all about what Market Levels Report is all about and what we do here, just let me know at info@marketlevelsreport.com. Thanks.